My fellow Resolvians that invest in Rezolve AI, let me tell you, today was not a great day. Now, in fact, before Trump decided to hell with stocks on this Friday, Rezolve was actually outperforming. Rezolve was actually doing quite well at one point. The high of the day today was actually $5.98. The stock was almost back into the sixes. It was looking pretty damn good. And then Trump happened. Well, here in today's episode, we will discuss the breaking news today for Rezolve. It is really good, guys. What this company was able to do with SmartPay and Squid AI, that is some serious deal making. Okay? Like, Wall Street got it wrong. Everyone basically got it wrong. Rezolve bought these companies for basically dirt cheap. I don't even know how they did that. But we'll talk about it in today's episode. We'll also talk about why Wall Street is saying that you really shouldn't worry about additional tariffs on China, that it's most likely not going to happen. I'll tell you kind of my expectation for this. Like, am I hedging right now? What am I doing? Am I raising cash? Am I buying certain assets? The answer is yes. Raising cash and buying certain assets as a hedge makes some sense right now, but it's not time to go full psycho crazy mode and sell your portfolio or buy massive hedges. In my view, I view it as a pretty low likelihood that Trump bazookas the economy. What I mean by that is what I've talked about before on this channel. You are one major shock catalyst away from a recession, and I don't think Trump actually wants a recession. I don't think Trump wants to go down that road unless China like absolutely takes it there. Okay? So yeah, we have a lot to get into here in today's episode. We're going to start off with Rezolve and then give you an update and updated views on this market sell-off in my personal opinion. So hit that like button as well as subscribe to the channel if you have not done so already, and let's get into it. Okay, so it's actually funny because I commented on one of Rezolve's posts. I actually tagged them in a post and said, hey, this was yesterday. I said, for tomorrow's presser, you should like tell markets what you bought these companies for. I said, hey, you want to know why the stock's falling? It's because you just raised $200 million and you bought two companies in 48 hours for an undisclosed amount of money. And we're like, okay, are we going to get diluted again? Yeah, no. No. I don't know how they pulled these deals off. It's actually crazy. It says in their press release today, Rezolve AI today confirmed the minimal dilution from the acquisitions of SmartPay and SubSquid were achieved for approximately $10 million in cash and 1 million Rezolve shares at closing. So, some of you guys might have noticed the sell-off that we seen yesterday as markets closed. Yeah, that was Rezolve. Okay, so organically the stock started to recover yesterday into the close, and then Rezolve sold these like million shares at the market. You can actually see at literally 3:59 p.m. yesterday, there was 1.9 million shares for volume. So Rezolve paid $10 million in cash and about 6 million worth of shares. So they bought these two companies for 10 million plus 6 million in shares. I don't know how they were able to pull this off so cheaply, but that seems like a big win for shareholders. Now, it says that is demonstrating the company's disciplined approach to M&A and a firm commitment to delivering shareholder value. So the concern that Wall Street had yesterday of, we're going to get more dilution, oh my gosh, no. The company reported they had about $230 million in cash, if I'm not mistaken, during their last earnings. They spent $10 million on these acquisitions. I thought it might have been as high as $100 million, right? a chunk of their cash. It was basically nothing. It was 1/23 of their cash. So these look like really good acquisitions. And that's why I think the stock was recovering today, right? Before the Trump tariffs, the stock was doing well. The stock was well on its way to, getting back into the sixes. And I think we would have closed in the sixes today if it was not for Trump and his announcement. Now, that's where we need to talk, obviously, about what this means going ahead for markets. But buying Rezolve at these levels looks compelling as hell. The stock is trading just over 3 times sales, which is dirt cheap for an AI company that seems to be executing well. I mean, 10 million, 16 million technically for both of these companies. SmartPay alone did $1 billion worth of transactions last year. Now, SmartPay's founder, Rogelio Lopez on X, wrote this post, and then Rezolve AI reposted it. It says, in 2022, after 9 years of trying to bring real usability to cryptocurrencies, I founded SmartPay, the perfect bridge between blockchain and the traditional financial system. It took 3 years of intense work, testing our MVP across Brazil, Argentina, and other countries, always with one goal in mind: financial inclusion. After all, downloading a crypto wallet is easy. The real challenge has always been using crypto in everyday life. With the acquisition by Rezolve AI, what was once local becomes global. A new phase begins, transforming our technology into one of the world's most efficient systems so that anyone, anywhere can use crypto as easily as making a PIX payment. To our partners, clients, and collaborators, thank you for believing. We're now playing in the global league, ready to show the world what we can do. And then Rezolve AI posted this on their X account, as this is now their latest post. It says, the acquisition of SmartPay and Hello SQD, which is the handle on X, but SQD, completes the 3 essential layers of Rezolve's vision for agentic commerce and finance. Rezolve's proprietary BrainPower LLM supplies the intelligence layer, providing contextual understanding, decision-making, and conversational interfaces that turn transactions into relationships. Subsquid supplies the data layer, the decentralized, queryable, and verifiable infrastructure that autonomous AI agents depend on to reason, interact, and learn from real-time data. So basically, Subsquid is a data pool that you can create AI agents. Think about it like if you want to make an AI agent to do a task. Like I could make one in theory to go over all the news of the day or whatever it is, right? That could be pretty valuable to what Rezolve is trying to do. It says, SmartPay provides the payment rails, enabling digital asset checkout and settlement across currencies and stablecoins. Together, these layers form the core architecture for AI-driven commerce, a new paradigm where AI agents autonomously search, negotiate, and transact across decentralized networks, reshaping how retail and finance operate in real time. So, again, this does seem like very purposeful acquisitions by Rezolve for what looks like dirt cheap. I mean, $16 million, only $10 million in cash and $6 million in stock, roughly. I think that's a win for shareholders. And I think we really wanted details of this because even I was estimating this could have cost $100 million for both of these acquisitions or more. And it is a fraction of what I thought. That's why the stock was recovering. But unfortunately, there's nothing Rezolve can do. There's nothing you can do on a day like today where Trump basically nuked the markets. Now, just to save us the time in today's episode, because I would rather not make a 35-minute long video on this, I'm not going to read the exact Truth Social post that Trump made. He basically said that he was shocked that China is doing these export controls on America, on even other countries as well, not just America. And he basically wants China to explain this and to stop doing this, okay? That's the long story short. And Trump said, if not, America has a lot of levers to pull to punish China, including, quote unquote, massive tariffs. Now, Trump also said in this like 2,000, 3,000 character post. It was a very long post today that he acknowledges if America has to basically bazooka China economically, that it's going to cause pain for America, but in the long run, it would be a good thing. Now, if you guys know my stance on this, you know that I think Trump wants a good market. I think Trump knows the economy cannot really handle like another big trade shock, right? I don't think Trump is so full of himself that he thinks he can do whatever he wants and markets are going to be good, economy is going to be good. Like, I think Trump actually knows the situation on the ground and the economy could not handle a trade embargo with China. I'm going to hope that's the case because it would seem to be commonsensical, okay? If I can tell you this, I'm sure the president could tell you this. He has more information, data, and resources than I do. Okay. But we're back in this very headline-driven market following today. The knee-jerk reaction in stocks was not a pleasant one, okay? As they say, stocks take the elevator up and the escalator down. This is the biggest red day we've seen since back in April. We have not had a day like today in a long time of just, getting punched across the stomach, okay? This was a real gut punch for a lot of people because it really came out of left field. Nobody was expecting this from Trump. We thought that things were going well. Even in the post that Trump made, Trump said he thought things were going well. He was going to meet China's president in 2 weeks. Trump also said there's no reason to meet China's president in person now that they're having this dispute. This could go really one of two ways. This could get worse, and we could wake up Monday with a 100% tariff on China. We're talking trade embargo with China. We're talking higher inflation expectations, weaker growth expectations, and, I mean, better than not odds of a recession at that point. As I've said on this channel, the big risk investing in this market right now is, hey, things look like they're going to be good for 2026. I see the consumer, the economy, the housing market getting better. I see this market moving higher. But the fact of the matter is, the labor market is one shock catalyst away from a recession. Now, we don't get shock catalyst all the time. They're pretty rare. Think COVID, think April 2nd, if that would have lasted a while. And now today, if we wake up to some kind of crazy new tariff on China, it would be a shock catalyst, and that would be enough to push us into a recession. Now, does that guarantee a recession? No, but the longer it were to theoretically last, the worse off it would be. Or the highest likely probability, I believe, is China says, okay, guys, we want to get back to trade negotiations. We were not planning on these restrictions causing such a problem. We're going to reevaluate things. Okay. That's the most likely scenario. Now, Wedbush says today, buy the tech sell-off. Quote, this is 1996, not 1999. It says that tech stocks slid Friday after former President Trump threatened higher tariffs on China and hinted at canceling a meeting with President Xi. The drop followed China's move to tighten restrictions on rare earth exports starting December 1st. Wedbush analyst Dan Ives called it, quote, a high-stakes poker game between the U.S. and China, but urged investors not to panic. Despite short-term volatility, he sees this as a buying opportunity for leading tech names. Quote, the bark will likely be worse than the bite, Ives said, maintaining a bullish outlook on semiconductors, software, and big tech. He highlighted NVIDIA, Microsoft, Palantir, the Messi of AI. Meta, Alphabet, and Amazon as key players in the fourth industrial revolution, calling this a 1996 moment, not 1999. Ives expects tech stocks to climb another 7% or more by year-end, citing strong AI-driven demand and ongoing investments from OpenAI in NVIDIA and AMD. He says, quote, buy the winners, don't run for the exits, he concluded. So, again, you're getting this approach, this commentary from most of Wall Street today. Most of Wall Street is saying today, AI trade is intact. This doesn't mean anything until something happens. That a lot of Wall Street is actually saying that they don't think anything is going to happen. Okay? That this is just another scary headline. And again, the bark is worse than the bite. But if we know anything about Trump, is we know nothing about Trump. We know nothing of what Trump is going to do. Trump essentially holds all of the cards right now, and we're just sitting there looking stupid. Okay? Like, we hold 0 cards. Okay? And without any warning at all, Trump could come out with a really bad headline on China, and this would only be the start of a decline. It could get much worse from here. Or Trump could come out and say China has agreed to talk about export controls. We thank China for their cooperation on this matter, and hopefully, China and the U.S. get along. Something like that would quell a lot of fears. I think the reason why you had such a knee-jerk reaction today is you had no follow on to this. It was just Trump that made this statement and then nothing. But you didn't hear anything negative about China relations as well. Like, it just came literally out of left field, and Trump's talking about massive tariffs and pain for the U.S. economy. That was not in anyone's cards for today. In fact, stocks were doing pretty well before today. You actually hit a new all-time high. So if things reverse and go back to normal, then could you see this market return to melting higher? Yes. Now, again, at the same time, if we do get another trade embargo with China, if Trump comes out on Sunday and says he's throwing 100% tariff on China until they lift export controls and it goes back into this, poker match, if you will, this chess game, you could fall another 20% in markets, right? Depending on how long it lasts, obviously, okay? But even from here, to fall 20% would put the S&P back to 525. Like, substantial downside could come from this, okay? Or we go back to business as usual. I think, again, if I were to assign probabilities on this, you're looking at like a 20% chance of Trump going rogue and just saying, F it, we got to do what we got to do. We're going to slap tariffs on China, and we'll deal with whatever economic consequence comes from that. It's maybe a 20% chance of that. There's an 80% chance, in my view, things go back to business as usual. Now, one could actually say, considering this market was kind of just melting straight up, that getting a jolt of fear into stocks could actually be a positive thing, right? Because when people start to get so bullish that they forget there's these downside risks out there, eventually it sets you up for a large decline, right? Like, it's kind of like going to the dentist. You go to the dentist and or take care of your teeth. That can prevent you from needing all your teeth removed and a big expensive bill down the line, okay? Today is like kind of going to the dentist for your 6-month yearly checkup, right? Reset a little bit of expectations, momentum, and then allow things to, kind of go back to how they were before. That could actually be a positive thing over the medium term, over the next couple of months. But that's the risk right now. We don't know what's going to happen. What I'm doing in my portfolio is pretty simple. I'm not hedging at this point because I think the greatest chance is that Trump does not want a recession, that he does not want to go back to, a 20% down market, right? I think Trump sees the reaction today, and that's a call to Trump that, hey, markets still respect what you say, okay? I think that's part of it with Trump. Trump just wants to have his voice heard and wants markets and people to believe what he says. Money is voting today, and money is listening to Trump, okay? But I think the overwhelming odds here is that Trump does not want some kind of economic disaster, okay? I would hope. I could be wrong on that, sure. One thing that I did do today, and I'm more interested in now, is potentially buying some of the rare earth stocks. We've seen those did really well, even as the markets came down, because domestic, rare earths are going to be more and more important, especially with AI, the age of batteries, magnets, blah, blah, blah. If you guys want to see the stocks that I am personally buying today, check that link out down below in the description of this video. It's a way to stay long, but kind of hedge this market at the same time. Now, even if things go back to business as usual, those stocks were doing well. They just did even better today because of the China issues. So I think that's an interesting way to kind of hedge portfolios right now. I personally did not do any hedging today, though. Okay, I personally did not go out and start buying puts, again, because I think the chances are better than not that things go back to business as usual, tensions calm down. Okay, but I do think right now that cash is king. Not like selling stocks. Obviously, if you have big gains in stocks you don't really care about, feel free to do what you guys want to do, take profits, blah, blah, blah. What I mean is getting as much cash as possible ready, starting those transfers to your brokerage account, doing extra jobs in person to get as much cash as possible, right? You want to be prepared to buy. As long as you're not in a shit ton of margin, if markets fall 20%, great. You have a better place to buy. Right? That's how you're going to make so much money. We made hundreds of thousands of dollars because of the April 2nd crash that we otherwise wouldn't have made. Okay? Because we took advantage of the buying opportunity. And if that's the way things go, even if you don't hedge and your portfolio gets killed, you can buy at the lows and amplify that return once we come out of it. So I think cash is king, but kind of alternative hedges could make sense in this market as well. Going long areas that actually benefit from not having relations with China. And strangely enough, those have been some of the hottest areas before today. So it's kind of a win-win in my view. Now, I do want to play this clip for you on CNBC. It says China Moon strategist Jeff Moon says that Trump's threat to impose new China tariffs is a hollow one.
Taken a sharp turn lower as the president did threaten this massive, he called it massive, increase in tariffs on China. Joining us this morning, Jeff Moon, founder of China Moon Strategies, former assistant U.S. trade rep for China Affairs. Jeff, it's good to have you back. Thanks for coming to the line.
Thank you.
Do you think this moment was inevitable?
I think so. I think we need to really step back. This is all part of the bargaining process. Both the U.S. and China, I think, want to somehow get together and reach some kind of an accommodation without resolving all of the trade disputes. From the Chinese perspective, in the meantime, the U.S. has been increasing measures against China, for example, adding companies to the entity list, and there's a lot of rumbling in Congress about additional export controls. And the Chinese, I think, wanted to draw the line and say, stop it. Let's start bargaining here. So what the Chinese have done is pursued several goals. One is, frankly, retaliation. They are mirroring, with their rare earths measures, they are mirroring how the U.S. treats semiconductors. The U.S. Foreign Direct Product Rule says that any element of a semiconductor that has American technology enables the U.S. to regulate all of those semiconductors. And the Chinese are doing the same thing with our rare earths. The Chinese are also trying to pursue their usual strategy of divide and conquer, which means that they are trying to get pressure on the U.S. government from semiconductor companies and perhaps from other countries as well, to get the U.S. to soften some of the measures that are out there. The Chinese are also trying to pursue their goal of self-sufficiency. I don't buy the argument that we need to sell the Chinese because we'll get them addicted to technology, because they have always said they want to be independent and develop their own technologies. So that's not valid to me. And they want to get the U.S. to relax tech restrictions as well. So there are lots of goals that are going there. The question is, what are the real intentions? I think the Chinese want U.S. chips, despite what they say, and I think Trump wants to go to meet them in Korea, despite what he says. So So nothing has happened that is irreversible here.
Right.
This is all snarling and bearing fangs at each other, and I suspect that that things are going to calm down. Trump's threat to impose massive tariffs is a hollow threat because he exhausted his ability to impose massive tariffs months ago, back in April, and I think the talks will resume and they'll reach some kind of accommodation.
Interesting. So to the degree that some argued the Chinese were trying a rope-a-dope strategy, trying to elongate the discussion cycle, did you ever buy that? And if you did, is that period now over?
I've always bought that. That is always the Chinese strategy, to delay. And maybe we got to the point where the Chinese felt like they couldn't delay because the pressure, like I said, from the entity list and other measures got to be too much. But that's always been the Chinese strategy. The Chinese strategy has always been to give the Americans just enough to feel like it's worth continuing to discuss, but not to shut down completely so that there's nothing to talk about and massive sanctions come. But now the Chinese are saying that, if the U.S. wants to press ahead with these sanctions, well, you know what? We've got some very serious leverage on rare earths, on soybeans, on other things that the U.S. needs, and we're ready to apply it. And I suspect that's been said behind closed doors in Geneva and London and other places between diplomats, and now the Chinese have finally decided to go public with it. And the really interesting thing is that China, because of the leverage that it has, is the only country that can behave this way with Trump and not suffer what it perceives to be, disastrous consequences.
Right. They have, 90% of the rare earths market. So when you say that, China can pursue living independent of the U.S., it's not quite the same for the U.S., right? They need access to that market for rare earths.
Well, another interesting difference is that rare earths is an immediate need for the United States. Chip technology is a prospective need for the Chinese. If rare earths are cut off, there are many things that just don't happen, many products that don't exist anymore. But chip technology is something for China's future, artificial intelligence and other kinds of things. So you could argue, actually, that the Chinese have actually more leverage.
Jeff, we appreciate it. I have a feeling we're going to talk again soon, hopefully, with your help. Jeff Moon helping us understand this China news today. Thanks.
So let me know your thoughts on this down below in the comments section. Ladies and gentlemen, there is a link down below as well to come join the trading community. Fun fact, we made hundreds of thousands of dollars. I did. We made collectively millions of dollars in the trading community by taking advantage of the markets back in April to the downside with hedging, but more importantly, accumulating massive positions at lows once things started to turn around and once we could see the exit for the crash that we were in and capitalized on that. Okay, and if shit hits the fan again, that's exactly what we will do. It is the best place to be in markets like this. Check it out, link down below in the description of this video if you would like to come join us. With that said, have a great rest of your day, and I will see you in the next one.